earn more, better future. Alright everyone, welcome back to Earn More, Better Future. Today, we're diving headfirst into the world of cryptocurrency investing. Jumping into crypto investing? Avoid these common pitfalls that can cost you big. On this channel, Earn More, Better Future, we're all about making smarter financial decisions. Today, I want to walk you through the absolute top mistakes that beginners make when they start dabbling in crypto. Let's dive into the top mistakes beginners make and how you can avoid them so you can invest with confidence. Let's get into it. Alright, the first major mistake, and honestly, it's probably the most common one I see, is FOMO investing. You see a coin, maybe some random altcoin you've never heard of, suddenly shoot up 100%, 200%, even 1000% in a day. So, you throw your money in without any real research, purely based on that emotional rush and the fear of being left behind. What usually happens next? Well, you've bought at or near the peak, fueled by hype. To avoid this, you need a strategy. Never invest based on emotion. Always do your own research. Slow and steady, based on research, wins the race, not frantic buying based on hype. Next up, and this one is critically important, is not securing your assets properly. When you buy crypto, you're essentially your own bank. If your crypto gets stolen or you lose access to it, it's usually gone for good. A lot of beginners leave their coins on the exchange where they bought them. While exchanges have improved their security, they are still prime targets for hackers. For any significant amount of crypto, you absolutely should be using a hardware wallet. Think Ledger or Trezor. Write down your seed phrase, store it in multiple secure offline locations, and never ever share it with anyone. Mistake number 3 is ignoring fees. And trust me, these can eat into your profits like crazy if you're not careful. When you're trading crypto, there are fees for almost everything. You've got trading fees on the exchange every time you buy or sell. Then there are network fees, often called gas fees, especially on networks like Ethereum, which can be incredibly high when the network is congested. Each individual fee might seem small, but they add up very, very quickly, especially if you're an active trader. Understand the fee schedule of the platforms you use and the networks you transact on, because those little cuts can lead to a big bleed on your portfolio. The fourth mistake I see far too often is a complete lack of diversification. This means putting all your investment capital into a single cryptocurrency. Maybe you heard Bitcoin is going to $1 million, or some new altcoin is the next big thing, so you go all in. Proper diversification is a fundamental principle of investing, and it applies to crypto just as much as it does to stocks. Within crypto, this could mean spreading your investments across established players like Bitcoin and Ethereum, and then perhaps smaller allocations to altcoins with different use cases. This helps manage overall risk and protects you from a downturn in any single market. And finally, mistake number 5, which can cause massive headaches down the line, is neglecting tax implications. A lot of beginners, and even some more experienced folks, either don't realize or choose to ignore that most crypto transactions are taxable events. The most important thing you can do is keep meticulous records of all your crypto transactions. What you bought, when you bought it, the price you paid, what you sold or traded it for when you did that, and the value at the time. Thankfully, there's crypto tax software out there that can help you track all this by connecting to your exchange accounts and wallets. Failing to report your crypto gains or losses correctly can lead to audits, penalties, and a whole lot of stress you just don't need. So there you have it, the top 5 crypto investing mistakes that can seriously derail your financial goals if you're not careful. We've covered FOMO investing, neglecting asset security, ignoring those sneaky fees, failing to diversify, and forgetting about your tax obligations. Each one of these can be a costly lesson, but the good news is, now you know what to watch out for. If you're serious about building wealth through crypto, or any investment for that matter, it's all about continuous learning and applying sound principles. If you found this video helpful, please give it a thumbs up, subscribe to Earn More Better Future for more content like this, and hit that notification bell so you never miss a financial tip that could make a real difference to your bottom line. Let's build a smarter financial future together. Thanks for watching, and I'll see you in the next video. Leave your comments in the box below.